All right. Good morning, everybody. How is everybody doing on this fantastic Tuesday morning? So, we're going to take a look at some macro stuff. These are measured moves that basically I had posted about a long time ago. All right. People I thought it could happen. It's absolutely staring us in the face. And right now, we are seeing a pretty decent move in the overall markets. So, we're going to take a look at that stuff. Glad to have you all here. Let's go ahead and start here on the Bitcoin CME futures chart. So there are three unfilled gaps now. We got a new one right here. But basically, this is just a measured move. And the way measured moves works is you have a leg of expansion before you enter a period of consolidation or volatility crush, if you will, where volatility goes from expanding to contracting. And that's when a consolidation range happens. A lot of people will call these consolidation ranges Wyckoff accumulation formations or distribution formations. The problem is you do not know which one it is until the pattern breaks down, which is why I've never been a pattern trader in my life. I like to watch price because I think that the candlesticks is all you need in order to be a profitable, consistent trader. But anyways, there is a measured move on this, and that measured move puts you down at around $23,685. Now that is a gap fill also on the CME chart. As you can see, there is another gap just below that at 19,080, and that gap would be filled at 18,460. Now those are extreme bear market bottoms, right? Extreme lows. If you get under, or if you go down to fill that second gap, you will do something in Bitcoin that you've never done in its entire history, and that is get below an old all-time high. On the BLX index, this thing has never done that before, not at the cycle market peaks, all right, cycle peak. So that's what we're looking for. That's what I was looking for over here on this swing high when we put in the 2022 new yearly high. I was looking for that to be faded, and that's where we initially entered the first section of this move lower. We were also taking shorts on that leg down there, but we weren't able to capitalize on the entirety of the move. But we have basically capitalized on the entirety of the second leg of this expansion phase. And you can see here, just over the past few days, I mean, this is a daily chart. So that's Friday after the FOMC, which I think that candle right there should have let everybody know. Once you broke down out of the bear flag or the ascending channel, this was the candle that done it. And then you can see here, you gapped down on Monday or Sunday night. And we've just continually went down. Now we are finding a near-term low. There is this level over here. Now there is something different. We know that there's several billionaires that have quite a bit of Bitcoin. I don't know exactly where price needs to go to liquidate those. I don't even know if they have liquidation points in the market, but they bought Bitcoin off exchange. So I don't see them getting liquidated or anything like that having any effect on the near-term price action. So to even worry about that isn't really, in my opinion, something that needs to be done. But we do have a liquidation point here of the swing low there. This swing low on the CME chart puts you right at $28,800, and you will pretty much liquidate all of that. If you go to the yearly chart, you're going to see that you're not far from 2021's swing low there. Boom. You are under the open on the CME. All right. So this is the near-term target. The 2021 swing low, that is $28,440. That is going to be our near-term swing target. If we can pull off these, you're going to see this is your spot chart. Looks a little bit different, but the 2021 swing low is going to be $27,678. So a little bit different, but the same thing, right? It's pretty much the same ball game. That macro measured move that I have on Bitcoin, there is also one on the dollar. Let's go over here to the DXY real quick, and I'll show you that. Let me get all this stuff off here. It looks like it's gone. I just had it. So, oh, no, there it is. All right, so this is a macro chart on the DXY. Macro. These are monthly candles. You can see this massive consolidation range that we've been on the DXY. We were in that consolidation for a very, very long time. I was trying to figure out. Let's see here. I think it was this right there. So that's the top end of your longer term range, and then obviously this is the bottom of it. So this is a 7-year range. This, when you traded up into this range, started the range was back in November 2014. So 8-year range almost, where this thing was just pinging back and forth from 102.91 to 89.107, and then you can see here on last month that is a legit breakout of that. And even if you wanted to put this down here on that bullish candles close, it would still be legit. You can see that this current month that we are on, we have came down, tested that, and we are getting another bullish push. So last month's bullish candle is massive on the DXY. But a measured move on this thing, a smaller term measured move coming from the consolidation range alone, puts you at 119.45. Just from the consolidation range. Now there is another way to take the measured move, which is the way I did it on, the Bitcoin chart, is to take it from the leg, from the swing low of the leg of price to the swing high, and then bring that measured move to the bottom end of the consolidation. That puts you up at around 137, 132. Apologies. So 132 could be like the maximum end of a big breakout play of a 7-year consolidation. Now, we know what happened to Tesla when it broke out of its multi-year consolidation. It had an absolute move, crush to the upside, but this is the DXY. It's a lot different. It's a basket of currencies that make up this thing, so it doesn't necessarily mean that we're going to be looking for a $119 target on the DXY. It just means that there is a measured move on this chart that we need to be well aware of, because the macro conditions have changed. We know that for a fact now. We do have headline CPI coming in tomorrow, and that number is lower than expectations, the expectations is lower than last month's print, which is good. That's good, because if we start getting that, then we could probably see the Fed start to slow its roll a little bit, but I don't see them doing it this year. I think that they have already implemented this plan. They are looking for the specified amount of rate hikes. I think they're going to stick to that plan. Remember, we keep saying that, you can't make an omelet without breaking some eggs. Pretty sure the Fed is okay with breaking the eggs of the SPX and Bitcoin, simply to basically get this inflation under control. Inflation is the absolute number one most important thing for the Fed right now, because if you do not have a good, strong currency, you do not have a good, strong country. All right, so that is their number one goal. They have basically been controlling the markets since 2008. I'm not expecting a massive, massive crash on the SPX or nothing like that. That is not how I roll. What I do is I look and I take measurements of what I think the macro backdrop is, and then we watch data points every single month, and we trade the price action that we see in front of us. All right, so I can't remember if I said this on a normal live stream or if I said it on members only live stream. But basically, if you remember, we had this support here, and we were watching last month's candle, the April candle. We were watching to see where it closes in regards to this support level at $38,491 and the monthly 21 exponential moving average. And we got a closure last April, last month. We did in fact get that close below the 21 and the close below support. Now, basically what I had told everybody is I want this monthly candle right here, the one we currently are on, to push up into last month's range. So that way I could look to get short, and this would give me basically a short position at the very top of this monthly candle, which I can see breaking down pretty big. Now, I said all this as this monthly closed at the beginning of May, and that is exactly what I have done. I have shorted almost the very tip top of this monthly range candle, and as you can see now, we have an expansion to the downside. 21 days, 15 hours left on this monthly candle. So please understand, this is not done yet. Please understand, this is not done yet. Now, this monthly candle's range is already pretty much the same size of last month's range, and it's only the 10th of the month. So 10 days into May, sell in May, go away. This thing has been absolutely slaughtered. I did not expect the move that we got yesterday on this thing. That was a monstrosity of a downside candle. I was looking at this swing low down here. Basically, once this one got penetrated, I was like, well, this will be the next target, but it would probably be next week before we see that. We've seen it all in one day. Boom, boom, boom. So a cascading event going on right now. This measured move, as far as just this consolidation range, has already been hit. So if there is going to be a measured move of the main leg, the main expansion going into the consolidation, we're going to be looking for much lower prices. Now, with that being said, we are looking for this thing to bounce. Let me see here. I'll just go back over to this chart. Simply because we have a new, looks like I changed it. So I'll just stay on the chart that I'm on. Never mind. I'll just switch it this way. We'll go over here like thus. We have a new, brand spanking new gap to the downside. So if you think Bitcoin's going to go much lower, and you're looking for a bearish setup, then you could probably watch this gap fill on the CME chart. Now, this gap does not have to fill right away. It could take months, and it doesn't even have to fill because these two gaps down here are still open, and they were put in December of 2020. So this gap can stay there for a long time if this thing gets some momentum, gets some steam. I just want to put this out there for Mr. Miles J. Creative. I don't think he watches my videos, but you guys know who he is on Twitter. Last weekend, he put out a tweet that basically said, are you bears going to get Bitcoin down to $30,000 anytime this decade? A little ha 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 joke. Well, if you look right up in the top left of my screen, right here where it says L, that, my friend, says 29,700. You have busted $30,000 on the CME chart. It is done. It's been hit. You have breached all the way as low as 29,700, and it took all of 9 days from your magnanimous tweet. 9 days. So basically, yeah, I mean, guys, you gotta take in everybody's account. You can't just follow the Uber bulls, because I'm gonna tell you one thing. They're gonna tell you to buy the dip on this asset, just like they have been telling you to buy the dip on this asset. Here, then here, then here, then here, then here. You get my point? And, if you're accumulating Bitcoin and you're holding it with an amount of money that you can afford to lose, you can do that. Absolutely. You can buy Bitcoin when it puts in these swing lows. If all you're going to do is set on it for a while, there's nothing wrong with that. It's actually a smart investment thesis if you think Bitcoin is going to be much, much higher in the next 10 to 15 years. Now, I do think that since we do have a macro backdrop change, it's hard to say when the Fed starts to basically stop being hawkish. First and foremost, they got to get control of inflation. And when they do that, then maybe they ease up on the hawkish nature. Then maybe assets can start to move up again. But if they got to full on go back into quantitative easing to stop this market from crashing, then we are in a lot bigger trouble than we think, right? Now, I'm not an Uber bear. I love it when assets only go up It makes it a lot easier to be making money when an asset is trending in the straight up direction. Every single person on Twitter on those days are professionals. It's these times that you need to look for those people. The people that have nailed this move here, those are the people you guys need to listen to a little bit, at least a little bit. At least find out what they're thinking, right? There's a couple guys out there that you can look at. We knew that the macro backdrop was changing. The Fed told us as much in October 2021. That is when everything changed, simply because we know that the only reason this market was so extraordinarily bullish was because of the Fed. So when they stopped doing their monetary policy that was basically propping this market up, there was only one other outcome, and that was to give back some of these existential gains. I know a lot of people were looking for Bitcoin to have what they call a big explosion to the upside. I just do not understand how they do not see that as already being here. Come on, I mean, this move that we've seen has dwarfed the 2020 or the 2017 bull market. This move has absolutely dwarfed it. It 4x'd it, 4 times bigger than that move. But that wasn't a big move, and they were looking for much, like, that's just insane. That's getting a little bit out there. Now, I do believe Bitcoin can do it. I just think it's going to take mass adoption, more than it has now. And basically, it needs to become what it was built for, and that is a hedge against inflation. Then it can absolutely start to move to the upside, as long as it's being treated as a speculation vehicle, as a risk-on asset. It will follow the broader risk-on markets, the S&P, NASDAQ, you name it. It's going to follow it. So right now, what we're going to do on Bitcoin is I mean, we're short. We're riding this thing out. Our P&Ls are looking fantastic. During the this previous Sunday, we did have one of those live streams, members only live stream, and this is the asset of which we traded on that Sunday. Basically, because it was back up, it had already basically got back above its 21 exponential moving average here and was reaching up into resistance. So we took this short right here on this day. It was Sunday at like 11, almost closer to 12 probably on that Sunday, but it was an absolute beautiful setup. Right here is where we took the trade on this candle right here. This bearish candle traded right up into an hourly Heath level. And we took that setup because it was at daily resistance. And that thing is absolutely looking pretty good right now. And the only other short in crypto that I am setting in is XMR USDT. We shorted this a while back. It is looking really, really good as well. This is where we took the short on this. Wait a minute, that is not where we took the short on this. We took the short on this at the very top right here. We took the short on this day, April 23rd, 2022. We shorted 278.67 being daily resistance, and that played out on an hourly time frame as well. Here, traded right back up, boop, hit that level and rejected. So that's what I'm trying to teach you guys. That's basically it. In my opinion, you don't need indicators. You don't need this. You don't need that. All you need is price and patience, good self-control, all that stuff that makes a person a decent trader. Throwing a dart at a dartboard is a profitable strategy if you consistently throw darts at the dartboard, okay? But we're killing it over here. And I don't like to see it. Someone told me yesterday on Twitter, you shouldn't be gloating or whatever. You shouldn't be smiling because people are getting wrecked. Listen, if you follow me, if you subscribe to my channel, you won't get wrecked. And if you do follow me and you are still getting wrecked, it's because you are taking other people's word over mine. I am basically a day trader, so I am in the know. If the Fed's doing something, I know about it, right? And typically the Fed is the one that controls this market. The Fed has been the ones that has controlled this market since the 2008 housing bubble. That is when they first started. Do you remember TARP? That word, TARP, that was going around. It was a flashy little headline piece. That's the same thing as quantitative easing, right? It's the same exact thing. The government starts propping up the markets. And since 2008, that's what we've been doing. So they got to get control of it. And they're probably going to let this fall a little bit further before they, come out. I think, in my opinion, if they just change their hawkish stance, if inflation CPI numbers start trending back to the downside after this year is over, next year they'll look at it, they'll probably quit being as hawkish, and then the markets will have a little relief rally. But as of right now, we're looking for Bitcoin to potentially find a bottom somewhere. I'm not picking a price, and then trading back up for that gap fill on the CME charts around 35K. Be a decent spot to start to look for short side entries if you haven't participated yet. For anybody that is new watching this channel, I do not sell my spot. I am trading on an inverse swap contract on the future side of the KuCoin platform. So I am trading Bitcoin with Bitcoin. The inverse swap contract gives me the ability to take a piece of my Bitcoin, put it into the market, and trade Bitcoin on these directional pushes. So it is a directional strategy, but we're pretty much killing it. That account is up almost 4x since this down move started. So yeah, my spot account is absolutely getting crushed. It's been cut in half. We are at a 50% drop on Bitcoin at this time. So yes, my spot account looks just as bad as yours. It is in half. It is cut in half from where it was up here. So yeah, by trading Bitcoin on the inverse swap contract, it gives me the ability to basically put that Bitcoin to work, even though it is, working, being inside of the spot market. I can still also use it to trade these moves. That's what I am. I am a trader. So, all right, that's what we're looking at right now. You've only got a little bit to go before you take out that swing low right there. I mean, it is so close. So close. And then basically that will be pretty close to the 2021 yearly low. This wick right there, I believe. Yeah, it's that wick right there. This red candle, that is your 2021 yearly low. So that's not very much further than where the B Word podcast kicked off. Now, it wasn't just the B Word podcast that started that rally when it fell the first time. It was also that ETF, the futures ETF. All that news there got us up to liquidate the swing highs, and now we're down. So I'm expecting this to be a red year. I don't know where it is. The measured move puts us down around 23K. Obviously, doesn't mean it's going to go there. No, but that's a pretty good target to have, in my opinion. All right, let's go look at some Forex, see if we can find something to trade today. Euro USD is still range bound. Let's get rid of, Jesus, how many lines does one need? Come on, man. All right, so basically, yeah, we were looking for a bounce on this asset to basically see if we could get a short trade on it. Last time I took a short position on this asset was here on this swing high there. That trade played out just fine. I have completely closed down that position because we are having trouble down here. The reason we're having trouble down here is because it is multi-year lows, guys. Multi-year lows. We're trading at prices we haven't seen since 2017 on this asset. Straight down move. Looks like it's getting a bit long in the tooth. This is the monthly chart, and you are setting at the oversold levels on the RSI. Not that good. So, taking new short positions down here is a little bit skeptical at best. But if you look at this asset is supposed to be pretty close to inverse the DXY. It's not 100%. It's closer to 60%, 59% inverse. But this hasn't broken out yet, whereas the DXY has. So if I have a target of 119 from a macro measured move, that would put the euro down around 85 cents. Is that going to happen? I don't know. I'd say once you get to parity at $1, maybe then you see a multi-month bounce potentially. But on the monthly, you can see that this asset has pretty much only been going in one direction since Forex was started, and that has been sideways to down. Pound is the same exact thing. So, I mean, taking new short positions here is okay for a day trade. Just understand that they are both kind of exhausted to the downside. This didn't give us a setup anyways. We were watching USD CAD yesterday for a potential near-term short, and that was a wrong call. Wrong call. We were looking for the dollar to continue its pullback. Nope. It just out of the middle of nowhere just blasted off to the upside. This is where we were looking for that to basically find support. We were looking for this candle here to take the short. Wait, that's not it either. Where is it, Wes? Where was it? 4, 5, 6, 7. Yeah, it was here. Okay, yeah. So basically, we were watching this level. This gone. We were watching this here. So when this candle put in this bearish move, we were looking for this candle to push back up into that, retest that level, so we could take that short position, and boom, to the downside we go. Yeah, that was the wrong call. This thing is moving to the upside, and it's moving to the upside with haste. If we go back out to the daily chart, you're going to see this thing is cooking now with grease. Let's go back to the monthly briefly. Near-term breakout of a longer-term monthly consolidation. This is looking good. You are into old monthly support. So, yeah, it could act as resistance. Keep an eye on that. Levels to watch for monthly setups will be this month's open. If you get a pushback down to there, that would be the very first spot that I would be looking for on this daily chart for potential bullish entries. Since you got to move there, it might not come back that low. So you can watch the old swing high over here. See if that level holds a support, because you are breaking out now. And since you're breaking out now, it can really start moving to the upside here. It does not take these things long, guys, to basically start cooking when they do. Moonboys and crypto Twitter is toxic. Always do research. Yep, exactly. Absolutely, my friend. Always do your own research. Stay away from those toxicity guys. Those, it's ridiculous. Fed changing their tone, definitely possible, although games go 3 levels deep. Yes. You won't really see, this isn't something that I'm looking for, right? We just know that tomorrow's number is going to be expected to be lower. If it comes out and the number's higher than expectations, then you could see another volatile day in assets, because the asset won't like that news. It's just one of those things, right? The breakdown is happening. We've had 6 bearish days on Bitcoin in a row, 7 bearish weeks. We're on the 7th bearish week currently on Bitcoin. So it is getting a bit extended to the downside. So basically what we're going to do is we're going to watch this last bearish closing candles close. That's what we're going to look at. Moving on into this week, we're not looking for it today. Obviously today you got a nice rally to the upside here. But what we're going to do tomorrow, and even into today, if it comes back down here, is we're going to watch this price, $30,078. Because also 30,000 is a big figure number. Bitcoin is such a massive number as far as its price. So, $78 to Bitcoin is literally the spread sometimes. If you look up here on the spread, you can see, $49, $10, $3, $8, $49, $160, $800. So the spread is going absolutely bonkers on this thing. A lot of volatility. Expansion. The volatility expansion is happening. Let's go look at the VIX, because I haven't looked at it. But we were nailing these things, man. We knew it was coming. VIX starting to move higher. $31. That's pretty good. Pretty good. I don't see it being like the last time we had a pandemic. It is absolutely possible. This looks more like a controlled sell-off than it does the pandemic, right? And the pandemic happened, the markets come off 30-something%, then the Fed steps in with quantitative easing. Boom, you get another bull market. So if the same thing happens again, then we'll be bullish, right? if asset purchases stop and the markets start to crash, they'll probably let it fall a little ways, but then eventually, if they got to step in, they will. You think they will? I think they will. And that will cause the markets to be bullish again if they were to do that. What I would love to see is I would love inflation to get caught, let whatever the Fed's doing, catch it, fix it, and then let the markets rebound naturally on their own. That would be a fantastic sight, wouldn't it? But a lot of macro guys don't think that that's going to happen. A lot of macro guys think that it's too late. That the only way these assets go back up is if the Fed intervenes. It's possible. It's possible. So if you're looking to play a bounce, which I don't suggest, in downtrends you sell off resistance. In uptrends you buy off support. But if you are only a long trader, or you're looking for the gap fill on the CME, $35,000 I think fills the gap, you can watch $30,078. As long as you're not closing like 4-hour candles below that price, you could take a nice little long there. But $35,000 is just a skip, hop, and a jump away from where it is. Probably take a couple days to get up there. I would suggest taking profits at the daily high if you do that, simply because it doesn't have to go fill the gap. This could be it. This little push that we've seen on the Bitcoin right now could be the top for, another push lower. This was a very, very volatile move yesterday. Just boom, 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 boom. Hours just crashing down. So, I don't think it is. I think price will mosey on back up to 35K, fill that gap. I think it's right in here is where it's going to be on the CME. Because this is 1700, so that's 5 o'clock. My time is when it started to break down on May the 7th. That was on a Friday, wasn't it? Saturday. All right, so yeah. So that's probably where the gap is. And just keep watching intraday support. You're breaking it now. You have found resistance, but you haven't really found it at a specific region, I don't think. This is yesterday's range. So the only thing that it's testing is this wick low. That's where it's finding resistance. And sometimes it will, right? When it gets really volatile, technical analysis goes out the window in some cases. But just keep your eyes on the levels. You guys know what you're doing. You know what I'm looking for. You know how to do this, right? You know what to do. What is up, says Wes. I just woke up a little late. Good morning. You'll get your lashes later. You're not allowed to come to work late. Just kidding. I feel like the only thing equities and crypto has going for it is being oversold. Yeah, it does. We can go back to the longer term time frames and check stuff out. Here is Bitcoin on the daily. Obviously, we hit oversold regions yesterday. It's funny because just like a day ago, we were talking about how the RSI still had plenty of room to go on the daily time frame before you hit the oversold regions. You're hitting it now. I do believe that we're getting close on the weekly. We are. This is all the data on the spot market. I guess we can go to the BLX chart and check and see how many times the weekly basically caught. What is that? Don't worry about that. It's just something I was working on. Here we go. All right, so here is the daily. We want the weekly. How many times have we been oversold on BLX? Not many. Let's do this and stretch them out. Yeah, only once, twice, twice, boom, boom there. And then again at pretty much the bear market low in 2018. So yeah, weekly RSI oversold test, pretty good spot to be a buyer maybe, right? It has been in the past. Never hit oversold except once right there. And that was on this nasty candle right here. Boom. You were printing. No divergence there. No divergence here either. Yep. So look for that. So that might be a good idea. Wait for that. And it could probably take one more week of downside to do that. That would take out 2021 low as well if this hits oversold. This may hit oversold on this week, depending on how much further it goes down, right? Because we're not closed. We got 5 days left on the close, man. This thing is just getting started. Just getting started. So be very careful out there, guys. Be very careful. Yeah, the spot looks a little bit further away than the BLX because the spot's pulling back. The spot week's pulling back. But you're pulling back into support, old support. That could absolutely be resistance. Absolutely be resistance. We'll see what happens. We'll see. I think it finds a bottom and then goes, fills the gap, and then runs away. But it might have enough liquidations occurring already that it's already done. Speaking of liquidations, let me pull Glassnode over here on this other screen. Bear with me one moment. We want to go check those liquidations. I am pretty sure a lot of longs have been liquidated. Let's come bring it over here. Alright, what do we want? We want long liquidations. Oh yeah, they're spiking. Jeez, $156 million. $156 million. Short liquidations. Remember we were talking about it last week. It wasn't as bad as I thought it was going to be. I was waiting for this. No, it was this one here. It wasn't that bad. The Thursday's FOMC meeting with that big bullish candle we had. That's where I got short at Daily Res there. The short liquidations wasn't nearly as bad as I thought it would be. I thought it would be another spike like this boy here. 68 million. No, long liquidations getting crushed, man. Still going up even. Still going up. Let's see what we got on the MVRZ score. Oh, man, we're getting close. We're getting close to that buy region. Let me go back out here. Let's go out 3 years. There it is. We're getting close. Remember, when we were in this consolidation, that's what I was looking for. A spike down, a capitulation move, if you will, down into this green zone. We are reaching for it, baby. Woohoo! Getting there. Almost time to start buying on Bitcoin. Almost. Almost. Put to call ratio should be spiking. Oh, yeah, look at that. Look at that. I didn't get a weekly outlook video out because I put that training video out instead. So apologies on that. I mean, there really wasn't anything to say. We were just basically riding it down. So there will be one this weekend. Hopefully the carnage will be over by the end of the week. Let's see here. I don't see any other questions. Good mornings. A lot of those. She's fully in, looking like a little human finally. Newborns are always more alien than human. Yeah, newborns are. What else can we look at? Let's look at the accumulation trend score. It's a new metric. Still nothing. Still nobody buying yet. They will, trust me. Unless they know something, right? And like I said, billionaires buy off exchange anyways. We already know that. Michael Saylor didn't buy on exchange. He bought off exchange. Elon Musk bought off exchange. This number is lighting up, so I can imagine this is when people, start buying. When these crashes start happening, people will DCA into this. So we just need to know how much lower it goes. We will when we get down into that MVRZ score. With this random market violence we got going on right now, we will absolutely be looking to buy some supports down there once they get filled. Is this a real live? Does he interact with comments? I do. I just wanted to get the analysis out of the way. Yes, this is 100% live, my friend. I shorted Bitcoin at 65K after the 69K rejection. Not bad. My friends and my friends in Discord group where I was trader doing TA and calls just laughed. October, my target is lower 30s. Nice job. Absolutely. It's fantastic trading. I don't like see people get wrecked, but I do feel being permabull. Listen, I don't like to see people get wrecked either, but 75% of retail gets crushed every single day. 75% of retail gets slaughtered every single day. If you don't like making money, this is the wrong business. And unfortunately, for you to make money, other people have to lose it. That's the way this works. It is the way this works, right? We're not doom boys over here either. We're traders. We trade it up, we trade it down. Whichever direction it wants to go, we are crushing it. So that's the plan. That's the whole point. To be a trader is to learn how to make money no matter the market conditions. That's what we do. We're not perma anything here. But 75% of retail gets slaughtered anyways because they are literally buying the tops and they are literally exiting their positions at the lows. That's just what they do, unfortunately. That's the name of the game. She's fully in and looking a little human finally. New. Oh, I read that. Sorry, my bad. West, easy, take my money, says Ed. I don't see many questions, actually. Just my people doing what they do. Chit-chattering. Maxi Permabull say the Fed can't tighten. Yet, here's where we are. Fed can tighten. Yes, they can. And we said that too. When that was being asked of me on these live streams, but the Fed, they can't. Yes, they can. When inflation is involved, they absolutely can and will tighten. Absolutely. Inflation is the number one most dangerous thing that can happen to the U.S. dollar. Let's see here. We're perma making money, bruh. Yeah, that's it. Will you load up on Bitcoin and see when the trend turns bullish? Yeah, I mean, it's not going to be today. It's not going to be this week, right? But we will be there. We have a target of 23K because there is technical reasons why that could be a target. We have a measured move down to that low on the main leg of price. This move here, a measured move puts you down at 23K. You have a CME gap that starts at 26 and ends at 23. 23 looks like a good target, right? That doesn't mean buy it when it gets to 23. We got to let the market put in a support. Being price action traders, we let price form the support, then we look to buy it, right? But this is just now breaking down. Just now breaking down. This is just getting started. You broke down Friday. The day after FOMC, you broke down out of this ascending wedge. You broke down on Friday, and this is what has happened since. It's just getting started, guys. We just got the first rate hike, too. Second rate hike. I mean, things are just getting started. I do think it'll find a low and start to chop around a little bit. Or you can buy, if you're looking to be a DCA, a guy that is dollar cost averaging, or female, or whatever your pronouns are. If you want to start DCAing, you can look at the RVZ score and start doing that when this orange price line chart gets down in this green section here. See how let's go all the way back out and just show you all of it. Now, it's an indicator. It doesn't mean it's going to work every single time. And also, when price is cooking with grease to the downside, you might push all the way to the back side of that green line before it does find support. But typically, in Bitcoin's history, on this indicator, anytime price has been inside of this undervalued section, that has typically been when you wanted to be a buyer. That is why we knew that this consolidation was more than likely going to break down. You almost need a capitulation before the market can actually find that support. So give it time. You're in the best place to be right now. Simple. You just wait. You just be patient. Let the carnage happen. That random market violence, let that happen. Let people get slaughtered. It sucks. It's sad. It's all that. But it's got to happen so price can get undervalued again. And down here is when it's undervalued, right? Up here in the red, that's when you want to take profits. And it's been working for the entire history of this asset. And the same goes for the 4-year cycle models. They are still intact. They are still working, right? We were looking for a top in November based on the 4-year cycle model. Looks like November's your top. Again, we were ahead of the game. The Fed told us in October they were going to cut. 4-year market cycle top put you in November, December. Boom, 69K, just liquidated it. I mean, all the checks were there to look for downside continuation. All of them. So, yeah, just wait for this to get here. And then that's when we'll start to, buy pieces here and there. Hopefully by then they will have figured out inflation. Any intraday shorts on Bitcoin to take? Not right now. Not right now. Like I said, you can watch today's high potentially, but with that gap being up here at 35K, man, it's a little bit iffy, right? Because simply the gap could get filled. And if the gap gets filled, then if you try to short today's high, if you even get a test of it again. So what I'm looking for is Bitcoin to trade sideways to up, right? Maybe find a little bounce, get up to 35K, fill the gap, and then find resistance again, right? And then roll over. This is just getting started. Now, if it's going to have a lot of momentum to the downside, then you might get one green day and 5 more red days in a row, right? We've seen it before. It was a pandemic before, but it can happen like that. It absolutely can. This looks more like a controlled sell-off. I mean, you almost have an absolute phenomenal perfect measure move on the S&P 500 right now. Broke down there yesterday. Testing, let's go out here and see what we got going on the S&P. You are below everything. It looks like you're looking for 39.40 on the S&P. That'd be a target. But once again, it can get a bullish bounce because just in bear markets, you get bullish rip your face off rallies. This one lasted for 3 weeks, right? That's when everybody thought it was going back to the moon. And then it rolled over. Dunk. So now we know. Monthlies, there's big targets, much lower on the monthly. You're looking at 37.59 for potential target. But that'd be big. That would be damn near. Let's see what it would be because you're already pushing. Yep, there's where you start being a bear market on the SPX. A little bit lower. About 38.50, you're going to be off 20%. Right now, you're only off 17, some change. 1650. We're getting there. And look at this monthly candle. I mean, just look how phenomenal of a short entry that was. Let me stretch them out for you guys on mobile. Old support. There's the breakdown. Boom, shakalaka to the downside. Retest. Old support right there. Boom, expansion. That was the short entry on the SPX. Right there. Here was the next one. Anywhere. And through there. Anywhere. Now, this would have probably been a stop run, right? That big wick to the upside, that probably stopped a lot of people out. Because this was the first test of supply here this month. Had a big move lower than this. Boom. But it ended up holding down. Then your retest level here could have even looked for a push up to there. So if price does find a low and gets another bullish spike, 43.71 will probably be where we're looking to jump in back to the downside. And we'll follow these swing highs as low as it wants to go, right? Every swing high will be there. We will be there. How do you think market crash would pay out in midterms? Cheers. I think we're going to see more downside, obviously. But I don't see it happening like the pandemic. The pandemic was there was a disaster there, right? Jobs were going away, everything like that. The Fed loves jobs. When jobs are everywhere, then our economy is strong. People were losing work during the pandemic. That's why the market just had an aggressive sell-off. But the Fed stepped in, right? Well, we're at 16 and change. That's nothing in comparison as to what we seen back then. I think we did that on the first month candle. Yeah, we did about the same amount of damage from the all-time high in 1 month when the pandemic happened, as we have here on 1, 2, 3, 4, 5, 6 months. So it's taken 6 months to get the same distance it got during the pandemic. So this is more of a controlled sell-off, in my opinion. And if that's what it is, then obviously we will look for support. The market typically goes up, right? Typically goes up. We're 6 months into a crash. Not really a massive crash, but it is dropping. So we'll see where it finds support. But dangerous side, it could get down to $3,700. That's where your next level of potential resistance could be. So yeah, this could fall a little bit lower. Midterm, everything looks the same. The Fed's going to keep doing what they're doing. We got to get tomorrow's number. Let's get tomorrow's number, tomorrow's CPI print. Let's see what we got there, and then we'll move on from there. We'll see how the market reacts. All right, any intraday shorts on Bitcoin to take? No, there wasn't. Didn't see anything. Don't worry, bulls. Bitcoin has strong support, $6,000. I don't see it getting that low. It's absolutely possible. Anything is possible, but man, I buy hand over fist at $6,000. Capital Investments asks your thoughts about 200, 300 weekly MA Bitcoin. So I look at the 200 exponential, and then I'll look at the 377. So we can put them on real quick. And you didn't give me a time span. Let me check the inputs here. Let's put this baby here on 200. Yeah. So we'll look at the 200, 377 on the daily, since you didn't give me a time. I forgot to check them. Here. Boom, boom. We were watching these on Bitcoin because also when it made fresh yearly highs where we were looking for a rejection, that's also where these things came in, right? So there's your 200 and 377 simple. 377, I put a video out when we were in this consolidation, like around this peak, talking about how this move right here, this thing has started to curve. That curve, this is a very slow, simple moving average. So for it to start making a move like that, that's not good, right? This thing is curling, starting to roll over to the downside. And then here's where we made the fresh 2022 yearly high, liquidated the 2022 yearly high. Your 200 simple moving average is setting there. So you got your 377 simple, your 200 simple. Now the exponential moving average was different, right? It was different. We broke above that. That's going to be your pink line here, or your purple line. We broke above that, and we traded above it for multiple days. But yeah, we were looking at basically all of the indicators. Yeah, it's cooking to the downside. Your 21 exponential moving average is like setting at around 40K, and that's a fast moving. That's a fast moving average. I mean, this expansion to the downside is getting volatile. But I don't know. Maybe you're talking about the weekly down here. Yeah, it's a beautiful target. I don't see the 377 being the target, but anything's possible. You got weekly resistance here at about $19,000 there, and then one right below it there. I don't see price getting that low because, like I said, in Bitcoin's entire history, it has never retested an old all-time high. Once an all-time high was put in, once you had your 80% drop or whatever, you never went back and retested the old all-time high. We know the old all-time high is at 20K. So I can see a liquidation of 2021's yearly low being good enough. And that also puts, excuse me, man, that Red Bull is making me burp and everything. That year, liquidating the 2021 yearly low will put you right in line with the 200 exponential moving average on the weekly time frame. Good spot to buy? Yeah, typically. That's also going to put you on the RVZ score green buy zone as well. And that'll be a decent capitulation move from this, because a lot of Glassnode charts that the permabulls have been using to basically rub it in everybody's faces about how this was the bottom of the bear market, we knew it wasn't, right? But those things are now what? Now what? Are those charts still validated or are they invalidated? We were looking for a capitulation. This is it. How low it can go is anybody's guess, but the 200 exponential on the weekly puts you right in line with the 2021 yearly low liquidation. I like it. Puts you right into the buy zone on the NVRZZ score. Puts you right around RSI being oversold. And we looked on the BLX earlier. We know that typically, and on the BLX, anytime Bitcoin has had an oversold weekly chart, that has been a fantastic place to look to become a buyer. Absolutely. Yep. So we just got to wait for that to happen. That's all. We're just in it to win it right now. We're just going to be simply sitting here and waiting. That's all we can do. We're short. We nailed the swing high. We're good. We're waiting. So we'll see what happens. But yeah, that 200 exponential, good spot to watch. Appreciate it, Heath. You the man. Thank you, Alex. Thank you so much. Hit the like button too, y'all. Yeah, if you don't mind smashing the like button, I appreciate it. Heath, thanks. Heath, going to be a Rose. Nama Yunez till then. Yes. Yeah, don't do nothing. That's a good one, my friend. AC. Love it. The worst fight in UFC history. Come on, Rose. Come on. Damn. Do nothing. Exactly. Good call, AC. Good call. Love it, my friend. Love it. Fed looks to me like controlled deflation of the everything bubble. Yeah, it's possible. 100%. West DZ, Trade Talk. Someone you look at silver, DBC, commodities, ETF, also the FANG stocks. Yeah, I can look at silver real quick. I don't know what commodities you're talking about, but we'll go look at silver. I mean, silver was getting crushed, and it's still getting crushed. Let's go pull it up briefly. Still some room to go to the downside on this thing, 100%. But yeah, ouch. The reason it's getting crushed is because the dollar's super uber bullish right now, and plus, with real rates rising, there's no alpha being generated in silver and gold. So we were looking for gold to come off, and if we're looking for if we're looking for gold to come off, then of course silver is naturally going to follow, right? Gold being the favorite investment in risk-off times. Let's see if it got a bounce yesterday, because I haven't looked at gold. No, didn't. It's getting crushed. Everything's getting crushed. SPX crushed. Bitcoin crushed. Gold crushed. Everything. Dollar up. Commodities probably up. DBC is the commodities ETF. Let's go look at it. And then I'm going to have to wrap it up because I need to start finding me a Forex trade. I haven't been looking at Forex this morning very much. A lot of things ain't doing anything either, or at anywhere we're looking for. Yeah, the commodities was absolutely rocking and rolling. I think this is going to be a near-term pullback. You're going to find support and look for this to rip. Let's get our quicker moving average on the board real fast. Let's get rid of these long-term ones because we don't need them. All right, so here you are. Red day closed yesterday below the 21 exponential moving average. So watch what happens on this today. If you get a big green candle blasting right back up above the 21, then you know, because you're part of the Trade Talk family, that would be an opportune time to look for bullish entries. But this is what matters. You got to wait today, see how today acts. If you get downside continuation today, then you hold off on looking for this thing to continue to be bullish. But it's in a bull market. It's in an uptrend. Year to date looks fantastic. Here is your opening on the year. You're trending well above it. Looks fantastic. It's a nice smooth curve to the upside. It's not rapid, so look for support. Look for support. 25.98. You also got one here at around 26.29. You know the drill, Wes. You know the drill. But yeah, I would be interested in seeing how today closes. If today ends up being a bullish engulfing, then I would look for a midpoint test of that bullish engulfing for bullish entries. More than likely. But it's going to matter what it does. A bearish day today, again, then you're going to have to wait for support. A full-on support test. And I can't look at all FANG stocks, but I will go look at the first ones on the list. So Facebook, Tesla's part of that now, getting absolutely shreked. Downside, here we come. there is support here. So you're coming into a potential area of support. This hasn't taken out its swing lows yet, so it's not nearly as beat up as the SPX, but it is working on it. Facebook, massive gap right here, right? This thing looked like it was going on up in there. To fill that, you are bearish again. So you're looking for puts on Facebook again, but don't buy them at 196 or looking for 196 strikes. I like Facebook puts at around 210, maybe a little higher. All right, so wait for price to move up for that. Because now what you're doing is if you're buying puts down here, you're buying on the expansion lower. Got a nice little gap here to target. So I wouldn't be looking to buy puts today. The puts being bought would have been yesterday up above $200. That would have been the area to buy the puts. Now, since the VIX is moving up, since the SPX is getting crushed, as these assets move lower, the premium is going up on the options. You're supposed to buy puts before the crash, right? You buy them for insurance. If you're day trading them, then it's getting a little bit expensive. With a $30-something VIX right now, the premium is going to be uber expensive on these. So wait for a push up. Wait for the SPX to get a green day. Find the resistance, then look to buy some puts. Not right now. Right now they're expensive. But it does look like Facebook's going to go fill that gap. Apple looking absolutely disgusting, but not nearly as bad as the SPX. It's back around its swing lows. Almost 18% down there. Is it going to hold here at demand? I think maybe you get a small bounce, but ultimately, I mean, look at that beautiful test of demand yesterday. Just stopped, done. Today you're probably going to be gapping up a little bit. Yeah, that's pretty much it. I mean, let's go look at the SPX and then we'll wrap her up. SPX down. See, you're getting a little bullish pop. You're only at the midpoint of yesterday's down day. That doesn't look great. It doesn't look great. It looks like you're probably going to get like a little relief here. And then maybe, who knows, maybe continuation lower. A lot of people got liquidated on this move lower here. Lots and lots of people. So look how that played out too. Remember, these are our downside targets, old swing lows. When you pushed into it here, look, you got a 3-day rip out of the deal. Then, boom, down. One of the slickest moves I've ever seen. However, that's where I got short on Bitcoin, and it was exactly the same scenario on the SPX as it was on Bitcoin. Big bullish rally on FOMC day, right into your 21 exponential moving average and into daily res. That is where I got short on Bitcoin. That is where you should have been getting short on SPX as well. It occurred on the same day. Now you're seeing pushes lower. That expansion is happening. So, yeah, right now, like I said, don't buy puts at the lows, guys, because the VIX is expensive. Your premium's too expensive. You need a pullback. A pullback into 41.70, a pullback into 41.41, something like that. Then you can potentially start to look for puts. All right, you guys have a fantastic day. If you're new here, make sure you smash that like button. Make sure you hit subscribe. Also, if you have a question that I did not answer, drop it down in the comment section below because I do read every single comment. I do answer every single question. You guys have a fantastic day. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.